Welcome to this week's roundup of key business developments in Sri Lanka. I'm Nishani Pigera. Let's dive into the headlines. IMF commends Sri Lanka's progress, approves third review. Tourist arrivals continue to surge. CEB to be restructured into 5 state-owned entities. In this week's main story, Sri Lanka secured another milestone in its economic recovery as the International Monetary Fund approved the third review under the Extended Fund Facility, unlocking $334 million. The decision reflects the country's steady progress, with inflation stabilizing, revenue collection improving, and reserves growing. IMF Senior Mission Chief for Sri Lanka, Peter Brewer, praised Sri Lanka's resilience, highlighting economic growth averaging 4.3% since late 2023. By the end of 2024, the country had regained 40% of losses from previous economic downturns. While reforms are delivering results, the IMF urged Sri Lanka to further focus on stronger tax compliance, targeted social support, and timely debt restructuring. Sri Lanka is set to receive about $1 billion from the International Monetary Fund this year, provided all 3 scheduled program reviews are successfully completed. With capital and interest repayments amounting to $366 million, the funding will play a crucial role in maintaining economic stability and strengthening reserves. Sri Lanka completed restructuring its loans with China Development Bank and has commenced repayments according to the latest IMF report. The agreement, reached in November 2024, aligns with the debt sustainability guidelines and has been endorsed by the Official Creditor Committee. Negotiations began in 2023, with Sri Lanka restructuring $2.19 billion, including $640 million in unpaid principal. China's Exim Bank was the first creditor to restructure Sri Lanka's debt, setting a precedent for the other lenders. Tourist arrivals continued its strong momentum, welcoming over 240,000 visitors in February. This surpasses February 2018's figures, but falls short of the record 252,000 arrivals in 2019. Year-to-date, arrivals now stand at 492,978, reflecting a 10% year-on-year increase and a 2% improvement over 2018. Daily arrivals averaged 8,579, up from the 7,044 in February 2024, though monthly arrivals declined 5.2% from January. India, Russia, and the UK remain top source markets, with India leading at 35,728 visitors. Sri Lanka aims for 3 million visitors in 2025, targeting $5 billion in revenue. With strong winter arrivals, the industry remains optimistic about achieving its ambitious growth targets. The Sri Lankan government confirmed that the Ceylon Electricity Board and its power plants will not be privatized, but restructured into 5 state-owned entities. MP Lakmali Hemachandra stated that while private sector involvement in electricity generation will continue, the government will retain full control over transmission and distribution, a move which marks a shift from the previous administration's plans for broader privatization. With the CEB facing significant losses, the restructuring aims to improve efficiency while ensuring affordability. The CEB posted a 3 billion rupee operating loss in December 2024 quarter, though it managed a marginal net profit due to other income and forex gains. The IMF noted that the country had missed a structural benchmark after recent electricity tariff cuts, as CEB's financial stability is deemed crucial for the next IMF review. The Cabinet approved a proposal to grant 219,233 hectares of land in Siambalandua to the Sri Lanka Sustainable Energy Authority for the implementation of a 100-megawatt solar power project. The project is in line with the government's goal of generating 70% of electricity demand of the country from renewable power sources by the end of 2030. The land is slated to be given to the authority as a grant, taking into consideration the strategic importance of the proposed project. The all-share price index at the Colombo Stock Exchange continued to trend lower this week, despite positive news from the IMF and bank dividends amounts to over 88 billion rupees. Turnover continued to be subdued, significantly lower than the 8 billion rupees reached in early 2025. At the Treasury bill auction held on Wednesday, yields on all maturities fell for the 12th week. Bids amounting to 318 billion rupees were received, of which 167 billion were accepted. The Sri Lankan rupee was steady against the US dollar this week, with central bank's indicative mid-spot rate ranging around 295 rupees. And that concludes our update for this week. For the latest on economic and business developments in Sri Lanka, do subscribe to our YouTube channel below. We'll be back next week with more insights. Thank you for watching. Stay safe.